Hey everyone, this is DayTraderRockStar, and today I am bringing you a very, very special educational video on scalping. I got a question from a member over the weekend on how to follow my technique that I teach on Day Trading Radio, but use it more for scalping. And because I use a set of indicators, one of the main indicators is the stochastic indicator. It kind of represents a lot to do with my entries and stuff. And each week I also put out a watch list that represents all these indicators lining up, and we call those high probability setups. When you have the most of your indicators lining up, you get a high probability of a bounce or a move in the direction that the indicators are showing. And you know, the positions are always, right on. It always gives you the best opportunity in this market, and I try to figure out a way of stressing this to new traders out there. Trading is not the easiest thing in the world, but I believe that's because a lot of us we're very emotional in trades. We don't know how to handle our emotions. We don't have the patience. We don't know discipline. We're just let out to the markets to try to, make a buck, and a lot of people don't know how to do that. And what the indicators do is kind of tie you into it kind of pull back and let you, make sure you don't overtrade the markets. And what I really wanted to do is let the market come down to you, where it gives you the best opportunity. Then you can take your opportunity at that point, because that's what really trading's about, is taking the opportunity. It's not that we really know that or can predict, outstanding news in the world, company related news. All we could go with is indicators, momentum, and patterns, and this is all based on that. So yes, the scalping part of the trade is so important, because the techniques just carry through from the longer range swing trades, from the daily all the way down to the 60, to the 15-minute chart if you use it, to the 5-minute chart, to the 1-minute chart. So I'm going to actually go over today how I use the method to scalp stocks, and this is probably the best technique I could give to a newer trader out there to kind of guide them, get them started in the market, because it has a higher degree of success, and it trains you not to overtrade. So now there's a lot to go into this, and I'm not going to do a whole detailed video on my indicators, because there's so many out there. You can just go on YouTube and do a search for DayTraderRockStar, and you'll see the whole system and the whole methodology and everything broken down into different videos. But right now we're just going to talk about individual scalping. And what I like to do is, I'm always comparing the overall markets, the S&P 500. I always want to be on the right side of the market when I'm scalping. That's more important. Even though the market might be coming down and we get bounces, I like to do that also. I mean, that's probably falls into a technique that we use a lot. But we also have to kind of always maintain a good view of what the markets are doing, because you want to be in the right position at the right time. All right. So what I do is, and to kind of break this down, when I do some scalps, I kind of tend to use the 5-minute chart. And what I did here is we're going to take three stocks that we could be scalping. Just for an example, Netflix, Amazon, and Tractor Supply Company, TSCO. These are stocks that we follow each day. And I think that's, start off by saying that you should get yourself familiar with a group of stocks that you could trade. That's one of the more important things, is to know your stock. That if you're going to scalp it, you should know it. You should come back to it all the time. You should learn about it. Have a group of stocks that you could do. And then what you do is you put them up on the board next to each other. This is what I do. I put them up on the board next to each other. I have 7 screens in front of me. You don't need 7 screens. I have 7 screens for the show. Make sure I get all the information out, but you can have a couple screens, and you throw these chart patterns up on there, and you also keep the S&P 500 nearby, and I also keep the futures nearby, which is the S&P futures, E-mini futures, and this is an example of Friday's market. And what we're doing is we're looking for the combination of the indicators setting up that we usually do when we scalp, E-minis. We look for a recognizable trend starting to form, and once we have that, we know that 2 points make a straight line, so that third test is a potential test. And if we have the stochastics and this is the full stochastics 1433 set up in an oversold level, that pretty much tells me, that's one of the better indicators you want to get. And you can see, you can even go back here in hindsight and look at the indicator and how it's set up and how the trend line's set up. Now, a lot of people, I find it sometimes silly to ignore this. Like if I were you, I'd pay attention to this level here. Each time it came back to that trend line and we had an oversold stochastic indicator setting up, it bounced. All right, and there's reasons behind this, and most of it has to do with machine, the algorithms, the black boxes out there that are recognizing these lines, recognizing the pullbacks, and what you're doing is you have an uptrending market, but you're buying on a slight pullback, so you're getting the best risk reward. So as the market pulls back, you have this bigger move here. You know that the trend is up because the trend line is showing that. So you get that pullback, you get the oversold level, the probability of that momentum switching, you're getting a move up. Until the next time you get that, you shouldn't take that trade. So that's one of the things I kind of force is let the trade come to you. There's no reason to guess where the trade is going, but the indicators are telling you, hey, this is a good level. You have support, you have a change of momentum. There might be some other things that are happening, recognizable pattern. And the combination of all those are going to give you a better chance and a better read on the market. So we always pay attention to that, and we kind of break that down into the 5-minute chart. So what I want to do is look at the 5-minute chart. As the day progresses, and it looks like you're trying to, remember here is looking for 10 cents maybe on the scalps, which is really not that much if you're in the right, that's not much. That's an eye blink. You could get 10. I mean, what I normally do is I usually go for 300 shares and look for 30 cents. I try to scalp the market for $100 a shot, and that's just because I'm just programmed to do that. I try not to stay away from. I don't go overboard. I don't take it. I just try to stay into that thing, and it's a methodology. It works for me, and I'd like to chip away. I have a good feeling for it. It doesn't give me a nervous feeling because I'm not into the market too big. So that plays an part on your emotions and your fear factor when you take a trade. You don't want to be all nervous because you're overexposed to the market. You don't want to be always swinging for the fences because more likely you're going to be shaken just by your emotional, and that's not going to give you a clear view. So it's important to always be in the market when you feel comfortable, and that's having the right position size for your account. All right, or whatever, just as long as you feel comfortable. So then we watch this. We're watching the full stochastics 1433, and you can see that sometimes they have a nice wave to it. Now Amazon is a good stock to day trade. There's a lot of day traders in there, and you can see each time. Let's see if we can bring up this. Each time we got back into an oversold level here, and I usually draw a line at the 20 mark, just to kind of give me a gauge. So if I could see that line crossing underneath it, I know that I'm probably getting a better pullback here. And, I also want to be looking for that trade. So in the case of Amazon, we'll talk about maybe, you always had that first morning pullback. And that was a good level earlier in the morning. And we got a little pop off of that as the stochastics ran back up. And then it came back into an oversold level. And as this is happening, you can see a nice move here in the market. But it happened after we got oversold. And again, at this point, we kind of closed out the day. We didn't do much. But the important thing is we kind of got through all this chop. This was a fast sell in the morning. You don't know what's going on. It's usually news related. The market sometimes gaps up, gaps down, and you get a lot of chop in the first half an hour to an hour. So, but once the market kind of gets into a rhythm, that's when I like to jump on board and take those indicators. Usually midday, and a lot of people don't like the midday trading, but not saying midday, but we're talking usually after 11 o'clock and before 3 o'clock. Probably 10:30 to 3 o'clock. I like to get that set up. And you can see lots of times, here's the S&P cash, and I always want to follow that too, because you're going to get those signals exactly on that, which we kind of compare with the futures. So an example on Amazon, we saw the pullback on the stochastics. We're looking at it. We're holding lows. We're probably wondering if the market's is going to break down here or not. But this is telling us we're getting very close to being oversold, and there's a little support line here. So what I want to do then is pretty much go out to and that's coming up around, looks like 1 o'clock, right around 1 o'clock. split in 12 and 1400. So right around 1 o'clock this happens. So at 1 o'clock also, I'm also following the market here in a way that, here's the S&P. At 1 o'clock, I'm also watching this, and we got a little pullback in the stochastics, but not much that we could see. Not much we could see here on this. But what we really do see is, because I'm usually watching the futures, and the futures are a good representation of the cash. The futures give it a really good setup here, because we're always tracking this. I'm always putting the trend lines in, and you can see right at just about at 1 o'clock, a little before 1, we have this pullback trend line oversold stochastics. So the setup was here right at that point. Right at that point, we got the crossover. Right at 3 o'clock, we started jumping off of this trend line. So that really would have, caught my eye. The nice pullback right here on stochastics. The trend line test, and next time it comes down there, we have a similar situation. And again, a very similar situation here, barely, and each one of those times we actually got a little bounce. All right, so we're going back at that 1 o'clock, and we see that that level's pretty much set up. So everything is checking pretty good. So the Amazon looks like, a good place to begin your scalp, and that's the basis of it. It's the basis of it is making sure you're not involved in a very choppy market. That's just very choppy. You want to have a rhythm to the market. You want to be able to be like the machine. Wait for your opportunity, take it, get your scalp, wait around it. You don't have to be machine gunning here. The more you trade, the more commissions you're going to build up, the more chance you're going to have to kind of overtrade and get out of your zone. If you just step back, let the market come to you, let these trades, as long as you have the trades in front of you, and you set them up like this on a monitor, you can have Amazon, Netflix, and these things just kind of, they update as they're trading. So you actually see the stochastics pulling back. You see the setup here. This was what stock is this one here? Tractor Supply Company was a good example. Very strong stock, and you got oversold. You could have took that trade just based on that indication, because very rarely does it get oversold, and when it does, it's usually just that small little pullback, which holding maintaining technical levels. It was a good level. So try not to make it too complicated. I don't want to make this sound like a very simple, no-brainer thing, and it can't be that easy. But believe me, when it comes to trading, it is that easy. It's harder when you start to mess around with what works. It's when you start to guess what the market's doing. You put an opinion on the bias of the market because you feel that the world is going to shit, or something else is going on, so you're very bearish because that's what you're hearing on TV. Markets don't see it that way. Markets, in some way are, they move on technicals, they move on a lot of underlying factors that we can't see, and we'll never be able to predict those factors. We'll be the last. We're out there trying to catch the crumbs of the bigger guys out there really control these markets. And when you come to that realization, all you have to do is take the settings, because these settings continue to work. They continue to set up, and every time you look back at it, you see an opportunity was there. So why would you not do it? Sometimes I just get, I said, all right, screw the script. Do this, try it. Or tune in every day, watch us do it. That's how good it is. And that's about it. That's the gist of it. So again, you can actually see that during the day. I'm always tracking the ES minis on the show, and we're breaking down the patterns as they happen. We always important to watch the patterns and the trend lines. Once a trend line gets really established, we look for that parallel universe to kind of begin, and it happens a lot. It happens more than it doesn't. Everywhere you look at a chart, you can pretty much see there's a range. Went up to here, down to here, kind of went back up to here, down to here, back up to here. And once you're able to, the faster you're able to identify that channel or that pattern, the more you're going to be able to trade it as it happens. So in a case like this, as you know, if probably a lot of you guys out there watch me, we talk about a 1, 2, 3 pattern, and the 1, 2, 3 pattern represents, especially off of a reversal or a trend line reversal, you have 3 areas, 3 pivots in the market, and right when you break through this downward trend line, you know that we're kind of represented a nice breakout. So we're going to, that represents a channel change or a trend change. So I actually take these two lines, draw a straight line all the way under, and I just put this I just put a parallel line up there. And what the theory is to trade each time it comes up to that level. Now this level came up to a 200 period moving average, a pivot area, upward trend line, recognizable pattern, and an overbought stochastic. So this was a high probability right here. This was a high probability short setup, and again, this is on the 1 minute chart. So you know, and we did break down here, you know. But again, we came right down to the trend line, and look how quickly we got oversold on the stochastics. And again, you can see the reaction off that. Underlying trend line, indicator 1. Stochastics 2. Recognizable pattern because of the 1, 2, 3 pattern 3. Any moving averages or anything? No. Support? No. So it's a 3 out of 5, you know, which makes it a high probability setup. You need to take that trade, and you need to just wait for the next setup that comes along. Hey, look, the trend line's gotten tested again. Hey, look, oversold stochastics. Yeah, you know, you got a little bounce off of it, and when you're talking about trading, you know, futures, that's what you're looking for. We're looking for a couple points on the futures. But the trend actually, you know, this was a little choppy. The trend actually, that bounce was actually held this trend line and actually moved up much higher off of that. But you always, I know people in the market, you know, they're always looking for the instantaneous results. You know, you want to get into a stock, you know, you want to get into a stock at a certain price, and you want it just to move up from that, not realizing, you know, maybe you're in the wrong area and just needs to pull back a little, needs to hit some support, it needs to hit a channel line. So you want to have the other indicators lining up also to kind of give you a gauge of that. So that's how, you know, we even trade the E-minis. The same similar situation. It's on a shorter time frame on the 1 minute chart, but I also continue to go back out and compare that with the S&P cash, because when the S&P cash is set up, you know, for a good setup, there's usually a very, you know, there's a really good correlation between that and the futures. And when this 5 minute gets oversold, usually I have a good shot of a bounce, and here we did have that bounce on the futures, and of course you see that bounce right here. This is the same thing. So on the 5 minute chart, that's when I rotate back to the 5 minute chart, and I have to have oversold here. So if I'm oversold on the 5 minute and the 1 minute, then that's a home run. That makes it even better. And then you can even start breaking it down into the daily and then 60 minute charts. And sometimes you'll start to see everything line up perfectly, and that's when you start getting really excited. So I hope you enjoyed that. I hope that answers that person's question. You know who you are there. I don't want to butcher your name by trying to pronounce it. Well, maybe I will. Enviado desde mi. Oh, maybe that says sent from my BlackBerry. It says sent from my BlackBerry. I thought the guy's name. Jeff, sorry. Jeff Solomon. I think he's in Spain. Jeff. Thank you very much, Jeff. I hope you got this. You know, I told you I'd do a video on it. And if you guys have questions, or you would like me to do a video on a question, please send those in, dtrs@daytradingradio.com, or just come by the show. I am broadcasting live each and every day, starting at 8:30, 8 o'clock. I'm into the office. You have a live picture of the screen. What you're looking at, you're actually looking at this video. What you're seeing today and hearing me is the same thing you're seeing and hearing each and every day. The whole market day is me walking you through the markets, lining up these trend lines with you live, right there live. Now, you know, we do have a little members section that people get the watch list of the stocks that are setting up beforehand, but that's another thing altogether. But this is it. All right, that's enough of me. Hope everyone enjoys the 10 for 1,000 watch list this week. Some good setups on it. I keep on always wanting to throw stuff out there on the YouTube, you know, world out there, because a lot of people out there are not members. But then again, it's like there's so much good, you know, there's such a good membership room and stuff that I kind of want to hold these new things that I'm finding here for another video. But yeah, that's it. So I'm done.